Hello, I'm Liz Lumley of Finextra, and today I'm speaking to Penny Hembrow of CGI, and we're going to talk about the capital markets. So I wanted to ask you, what are some of the trends that the industry is talking about currently?
Well, we've just interviewed 125 banks exactly about this subject, and I'd characterise it by a very cautious return to some confidence in the industry itself, which after many years of low confidence is an interesting sign that's come through as we talk to the participants, both buy and sell side in capital markets. Now, what is clear though is that control, so internal control and recognised control in the marketplace and demonstrating control, is a key part of what people are concerned about in the industry. It's clear that the industry itself has taken a significant knock in terms of confidence in it, and continues to take knocks and continues to have fines for behaviour of one type or another. And therefore the sponsorship, implementation and maintenance of control industry-wide and within participants came across very strongly in all the conversations we had. The second aspect is actually about data.
It's always about data.
It's always about data. Now, in other parts of financial services, we talk about digital, but in capital markets have been users of data and high volumes of data for decades. So they're masters of data. But what all of them are saying is that the amount of data that they're now consuming and manipulating in order to demonstrate control, make reports, but actually most importantly to make money, to make profit, which is how capital markets really makes money, is through understanding differences in data patterns, is exponentially growing. And then finally, they're talking about how can we improve the trade life cycle. So many years ago, we talked about straight-through processing.
Yes.
So this is straight-through processing coming.
T plus zero.
T plus zero. This is exactly, it's coming back again, but this is coming back because a lot of transactions are coming back onto market, and therefore it's facilitating much more efficient management of the trade life cycle and end to end. And the questions are being asked, if we improve this at a market-wide level, will it help the industry to move to greater margins and greater profitability and enable far better efficiency for all the participants?
So, Penny, given these trends that you've outlined, this cautious return to confidence, what are some of the business and IT implications of this?
Well, I think the first one that I particularly highlight is that the banks are still rescaling their operations, their organisations. So with the new regulations, they've obviously had to cut back certain activities, and they've retreated from certain types of activities and geographies. And so they're rescaling, and they're also driving their costs out. Now, they've been driving out their costs for over 5 years. So what we're seeing now is the next generation of cost reductions coming through. And that's touching not only IT, but also operations. So from an IT point of view, there are very strong moves to leave no stone unturned in terms of reducing the cost of capital markets. And they're looking at how do we use outsourcing? How do we standardise on standardised applications? How do we modernise? How do we re-architect? And these were things that in the good old days of capital markets people didn't think about at all. But there are very widespread programmes about using near and offshore centres of delivery to really reduce the costs. And what we're also seeing is the emergence of shared services within the trade life cycle, cross-product, to reduce the costs again. The second thing banks are talking about is control. So there are massive regulatory control programmes going on both within the business and in IT. And that's consuming a lot of their change spend at the moment, making sure that the new regulations are embedded across the business and pervasive in the business at all times. And then finally, what we're also seeing in reaction to the consumption of data is that banks are starting to say, well, why can't we use cloud services in a much more optimal way? They've been tending to use their own private clouds at the moment. but they want to really start looking at agile infrastructure. They want to look at different ways of managing their data at much lower cost, using open source technologies. We can see this trend coming through, that instead of packages, they're now looking at much lower cost application development and functionality development on much more agile infrastructure in order to get the cost down out of the industry.
So Penny, looking ahead 2 to 3 years, what should the industry be focused on?
Well, the drive for cost reduction is clearly not going to go away. And so banks are needing to think not only about how to rationalise, but how to run technology at a much lower cost. Now, what we're seeing from an IT supplier point of view is that increasingly capital markets organisations are coming to us to set up delivery centres and industrialised delivery centres for them, and to help them modernise their technology and move to new technology as part of those outsourcing arrangements. The second aspect is this new technology. So if you have data going around at such velocity in real time, this low latency intelligence around the world, how can you leverage the new technologies in open source, in cloud, to support capital markets businesses? And that's an area that we see real innovation coming through into the market. And then finally, there is a big question about these cross-industry platforms, this efficiency in the trade life cycle. Mm-hmm. Does this happen as a cross-market initiative? We could even go back to the GSTPA.
Oh, no.
Exactly.
Dirty word.
Exactly. So does that become a market initiative? Mm-hmm. Or in effect, does it become the flow monsters of the buy side, mm-hmm. who are in fact running the trade life cycles for everybody else? Mm-hmm. And that's one of the questions that is really sitting in the middle of capital markets today, is how do they affect this massive transfer of transactions in the world's capital markets whilst maintaining an efficient market, and particularly with the growth in scale of the buy-side organisations.
Interesting. I like that phrase, low latency intelligence, not
yeah.
high frequency intelligence.
Yeah, absolutely. Huge volumes of data, mm-hmm. real time, and generating intelligence.
Excellent. Thank you very much.
Thank you.